No worries at all. Great. Hello, and yeah, welcome everybody. So, wow, another big week in the market today. We've seen some serious action this week. I know a lot of you have got involved, which is awesome. You picked up on all of the key things. You know, the good thing about what's happened this week is that really none of these moves should have been missed. I think that you pretty much had an opportunity for nearly every serious move that happened, and we'll go through a lot of them and see, where they might end or see where they're what we've got. I know I've got a few questions that we'll get to as well from the Discord. And yeah, we'll get straight into it. Is this just out of curiosity, is this getting a little bit late for people at 10 p.m. our time? Is it a little bit late for you guys? Or not too bad? Yeah, it's hard to say, isn't it? I mean, like you kind of damned if you do and damned if you don't. Like if we do it earlier, people complain they can't get to it from overseas, and if we do it too late, 'cause I know a lot of a lot of you guys are from Australia, obviously, so it's a bit of a tough one as to which way we go with it. I know, um, yeah, no, not quite, mate, not quite. Yeah, we've been playing around for a little bit, just trying to get the timing, spot on. But I know that the last daylight savings change that happened has really screwed everybody over. Now it's really tough. So I'm thinking that we probably will change back to an earlier time slot soon. It's just working out exactly which one it's going to do. We're getting a very busy schedule in the next. Well, we're going to be busy for the next 3 weeks, obviously, around the up to about the 18th, 19th of December. That's when we shut down all of the live stuff, because I mean, there's nothing happening after that anyway. But we've got a very full schedule up to then. Let me tell you, we've got our first options one is going to be in. Oh, I believe it's next week. It's either next week or the week after. And then when we come back in January, they're going to be just going basically rapid fire. The chat room is going to open as soon as the course is complete, which is not very far away now, as you probably already know. We've got a double release this week. On Friday, there's going to be 2 modules for those of you who are waiting on that one. But yeah, it's going to be an interesting one. Fred says that it's too late for him. He must get up at 4:30. Fred, I hear you. I understand your pain. But let me tell you something about my day today. I was up at 4. I did an hour's work. I went to F45. I went to Melbourne. I got home from Melbourne about 2 hours ago. I was in meetings all day. I've had to prepare charts for my AusBiz meeting tomorrow morning. We're doing Q&A now. After this at 11 o'clock, I've got to prepare the rest of the charts for the AusBiz meeting tomorrow morning, which will take me till about midnight. And I've got to get up at 4 o'clock in the morning to start again. So as much as I feel your pain, I do. I can't do it any earlier, especially on a day like today. But look, it is late. I understand that, especially for people who aren't in Queensland. So we will get working on that. And don't forget, if you can't make it live and it is a little bit too late and you have got a question, fire it away at me and I will get to it. Okay, so you can always watch the replay and catch up on it. But I've had a lot of requests to make it earlier, so I'm gonna heed your warning. I don't really want to be up this late either. I'm not gonna lie, especially when I have to get up early. So tomorrow's AusBiz is at 2:40, but we're doing an early pre-recording of it, so you'll be able to catch it a little bit later in the day. All right, let's jump into the charts. Let's have a start with the Aussie USD. Very straightforward. We'll go to the smaller time frame straight up. We saw that little bit of a kickback resistance here. Look, it was always going to test this again, wasn't it? I mean, it couldn't keep going the way it was going. We saw patterns forming everywhere. Double top, test of the double top. Obviously an Eve Adam, bang off the 200. Did anyone catch that, by the way? Dave, did you get that one? Not sure. I don't know if we've got a lot of microphones on tonight. Hopefully you did. You didn't, or you did?
No. I haven't been trading the odd for a while, actually. Just haven't been watching it really. I've been looking at other pairs, mainly Euro USD and Pound USD.
Yeah. We will get to the Euro USD. Don't worry about that. Like, I mean, it's copped an absolute smashing. And look, it's finding those levels now. I mean, we know it is finding the sort of levels that we're expecting. It's going to probably find a little bit of support, but to me, it's kind of already done the job. But this one, I want to talk about the Aussie for a little bit because, yeah, this is pretty much, everyone can see this retest, right? Like you've got your, you can see that we've obviously got a top here. There's no big secret there. Yeah, the second one touched the 200 on the hour, and if you go to a daily, of course, that's going to be pretty close to the 50 and the 20. On a 4 hour, of course, it was going to be around that 20 moving average as well, and more importantly, that reload zone. So, it was an important zone. There's no question about that. But when it did this and it came back and retested it from the bottom, I know it's only a small one, right? Like it's not a big deal. Like it's not like it's a massive trade. But what it did do, it's only 30 pips, right? But what it did do, it started the catalyst for the next move down. And that's what I like about patterns that are in the direction of the prevailing trend. So when you see this and you say to yourself, well, we know that the bigger time frame is in a pretty strong downtrend. I mean, there's no big secret there, and it has been for quite some time. When you see this counter trending sort of action, all this counter trending is trying to do, this is not trying to reverse a market. All this is trying to do is find the next point to sell off again. When the big one's not finished, which it wasn't, okay, all these patterns are going to do is give you the reinforcement that the continuation is going to effectively kick in. So I actually did get this one. I missed the I wouldn't have taken that anyway because it landed right on the 50. But by golly, when it was hovering underneath these, and just sort of sitting below the little mini neckline, couldn't break past the 20 and the 50. That was all in. There's no worries about that. That was always going to go short. And my target, well, tell me where's my target? Someone tell me where my target would have been. Can anyone tell me? You know how I trade. What would I have gone for?
Previous low, well, the first resistance, really.
Yep, pretty much where my line is here. I'm not greedy. I know that 72, 90 to 73 area is pretty strong. That to me is a pretty good move. Yeah, I was really happy with that. And that's all I want from when you do this enough and you get these moves enough, you're not going to need big long trades to stay in. You can do it both ways. Don't take me wrong. I'm not saying that you don't stay in for the longer ones, but I know there's a lot of traders in here that are taking the smaller moves. Like, Fred, you see that, don't you? I mean, we talked about this a little bit in the mentoring. Fred, you can see the move that we had there. So this is the sort of move.
Nice and nimble, nice and small.
Nice and small, and there's nothing wrong with nice and small when you do it consistently. And the thing is, when you're doing this, right, you can get an opportunity like this, 10 or 15 times a week. Sometimes when the market's trading. Now, even if you only get 1%, this was a 2% trade because I mean the stop loss was only just above here. You didn't need a big stop loss. It was a 2. I think it was 2 and a bit to 1 actually. But you could easily make 10 or 15% in a week when the market starts to move. The key is not to jump in when the market's not doing anything and just trying to make it happen. Now, I know we talk about this a lot. We always say, don't jump in for no reason. And as much as you can say that, people still do. But what I am finding I'm noticing this from the Discord community, is that people are less inclined to do that now. And I'm seeing far more consistency in the emails that I'm getting sent from the way that the trades are setting up, that people are actually being a little bit more patient. So yes, you're not going to get as many trades, no question about that. But do you need as many? I mean, if you did 15% in a week, is that enough for you, Fred? Would you be happy with that? Stephen, Dave? I mean, that's
I like a bit more, of course.
Of course.
50% is good. 50%.
Oh, okay, sure. But what I'm saying is though, if you don't have to go in for big long trades all the time to make good returns. Okay. If you're scalping, understand that you are scalping. The Aussie's been a bonanza. Make no mistake. It's been a bonanza. It was horrible in this period here. We highlighted it, flagged it, and said, do not trade it effectively. We're saying it without saying it. This is not a pretty trade at this level here because it was contradicting everything else that was happening. But the 200 soon sorted it out. And then when it did start to fall, it was effectively trading poetry. Like that was, that test to there, like it was just great. Like the retests of that. Now, I see this as clear as I see the sun in the morning, right? Can I have confirmation that you guys are seeing the same thing? Because if you're not, I need to explain it a little bit further. But is everybody seeing why once this happened, this has been technical perfection for basically the last 300 pips? Everyone can see it, right?
Yes.
Yep.
Great. That's the important thing. It's no point me going on about how easy it is to trade that. You have to understand why. And that is, I'm going to show you what isn't pretty in a minute, so you can make the comparisons if you don't know the difference. But this is what we strive for. This is what we're looking for. And when this happens, by golly, we've got to pay attention. And this is the time where, although you may not have a lot of time in front of the charts, this is where you want to pay a little bit more attention. In a week like the one just gone, you want to be paying as much attention as possible to the markets, because you're not going to get this exact style of trading every single week. We know that, right? There are going to be weeks sometimes where you really struggle for opportunities, but these last few weeks, have been fantastic on that one. We'll go to the CAD quickly now. We'll start moving through a couple of these. The CAD.
Sorry, Tyrone. Tyrone, can I go back to the Aussie on the daily? I think we are at a crucial point. If you get the 3 lows there, if you connect it, you have a trend line. So it's exactly on that trend line at the moment.
Yeah, 100%. It's at a very, very critical zone, Fred. This is exactly why I was quite happy to take my profits at 73, because I still fully expect that it's a very, very good chance of getting to 72. Make no mistake. I'm not thinking that it's going to stop here. I think that we've just got a moving average crossover that's probably going to help it go down. But it is at a crucial zone, and I don't want to be the one batting for the weak Aussie. I'd rather somebody else did that. We'll let the people who are speculating do that for us and push it lower. Now, if it does get pushed lower, okay, this is where we're going. No problem. There's plenty of room there, but let someone else do the hard work. We don't need to be getting involved. And that's exactly why when you go to the smaller time frames, and you start to see there are patterns forming now that you'd say, well, you could make an argument for the reverse. Now, like this is no question, Class A divergence, right? There's no question about that on a 4-hour serious time frame. Like that's it's there, and it's pretty clean too. They're nice, clean troughs and peaks. You could definitely make a case for this to start pushing a little bit longer. But I think, though, that if it does that, it's going to run into a fair bit of trouble now. It's got trouble everywhere you look, okay? And not far away either. That's the thing for me. The trouble's not far away. And when trouble's not far away, I'd rather just sit it out. The easy money's already been made, okay? And I think that's what Fred's trying to say. There's trouble here, and that's why we don't really want to be involved. Now, we could switch at the drop of a hat, and I am like that. Now, don't worry about that. As much as I've got an opinion of where I think the market is going, if the market does the complete opposite of what I expected, and I'm happy with what it's done, I will jump on the other side. We have that advantage that we are nimble. Okay, we are able to be nimble as retail traders. We don't need permission. We don't need to go doing anything fancy. Let the market lead the way. So, knowing that there is trouble, potentially to go lower, it's hard to trade against this, especially when you've already caught a good short. So this is why, you sort of say, well, it's a bit after the fact if you're going to be, like a lot of people would look at this and they would say, well, that's Class A bullish divergence. We should be going along here. And, if you are only trading really, really small attacks at the market, you could make a case and say, all right, for me, what would have to happen here in order to play this game is I would want to see a lightning bolt on a 1 hour. I'd wait for the setup on the 4 hour. Okay, no worries there. And then I'd go to the 1 hour and I want to see a lightning bolt. So what that's going to take is, probably a 1 hour close above a decent close above the 73, break this level. It's a serious level. Okay. And then have a scalp for about 25 pips. Am I inclined to do that? No. Am I going to do that? No. Mainly because that's not really enough pips, I think, for the risk of trading against a very, very strong trend. Now, if that was 50 pips and yeah, the next real zone was maybe up here, okay, I would wait for the lightning bolt and probably wait for the 4-hour break lightning bolt as well. I'd wait for a bit of a pullback because it's hard to imagine that the 4 hours is just going to go bang all the way to that, okay? But that's another 30 or 40 pips. That's a different story. It's a trade that's actually worth taking at that point. So I think you got to be a little bit choosy. Now, if you're going to be able to watch the market and you're going to go for 25 pips, that's not too bad either. But what my problem with this trade, is there anyone here I can pick on? Who can I pick on? I'm not going to pick on anyone. I'm going to open it to the room. I'm just going to see if anyone wants to tell me, what do you see as a problem? And why would I see this as a problem? I mean, it might not be a problem for anybody else, but I need a close at that level there, okay, in order for me to be comfortable. And I'm going to take my profit at effectively 73.30, which is the next point. So let's call it the 30 is about there. Okay. So we've got a very clear break point of where market needs to go, and we've got a very clear take profit, right? Can someone tell me what they think my problem is with this trade, apart from the fact that there's not a lot of pips? Does anyone know what I'm thinking?
Candles are indecisive, mate.
Yes, well, the candles are definitely indecisive, but let's assume that they're not. Let's assume that the next candle gets to our level and we get a nice big bullish green candle. You see two lines there. You see your entry point, you see your take profit. But what's the piece of information that we're missing? The stop loss, right? I'm seeing that, so people are writing comments in Discord. So I've got 3 platforms happening here again. Correct. Whoever said stop loss is correct. And that's the problem with this trade. The stop loss, really needs to be below the previous low. Let me get rid of that. I don't know why I did that. Hang on. So God save us. All right. Stop loss needs to be below there. Okay. And your entry point is there. So you're effectively going for less pips than you're risking. And that's my problem with it. Okay. That's why straight away I don't like it. I look at that and say, can it do it? Yes. The likelihood of it doing it, probably 60 or 70%. But is it worth the risk? Given that your stop loss has to be where it needs to be to actually make that trade happen. That's the only thing so I look at that. Some people will look at that and say, well, you know what, that's MACD divergence. I'm happy with that. That's what it's looking like. We've got enough power. It may get there. That's true. But to make that trade, let's call it worth it from a risk standpoint, you're going to do one or two things. You're going to say, well, I'm going to move my stop loss closer and see how we go. That is never a good idea, right? And the reason why it's not a good idea is because it'll teach you a bad habit. Now, you'll probably get away with it. You probably will. In this instance, do we really need to be so protective of this trade? Maybe you don't. And if it did get to this point here and closed here, and you put a stop loss just below maybe the 50 moving average, and you got away with it, it went up there, you might make a 1-to-1 or a 1.5-to-1, and you might say, well, that's pretty good. I'm pretty happy with that. But the problem is what it's done is it's given you the confidence, rightly or wrongly, to put a stop loss where it shouldn't be. You've adjusted, you've curve fitted your stop loss to meet the trade rather than the other way around. Okay. Now that is the biggest undoer of traders. You will get away with it a lot. Don't take me wrong. You will. I do. But you know why I do? Because if I'm watching a trade and I'm scalping, I'm watching it. And if it does something even on a smaller time frame that I'm not happy with, I will take that trade out. But if you're going to actually scalp it and follow the absolute letter of the law and leave it alone, right, what you're going to be tricked into doing and seduced into doing is actually making your stop losses fit the take profit rather than the other way around. This is the number one thing that you have to focus on because that's the only thing that controls your risk. So if you don't do this first, notice how we did it in the wrong order. So the first thing I look for when I'm actually placing a trade is not where my take profit's going to be and not where my entry point's going to be, where if I entered this trade here and now, where my stop loss is going to be. Because if that's not right, none of the rest of it's not going to be right either. Okay, so that's all of the little things that I look at. What I'm trying to do is pass on what I look at, so you guys can maybe take a tip here and a tip there. I'm not saying you have to do it exactly like me. I'm a little bit, believe it or not, I know I sound like I'm a crazy scalper, and I'm always talking about scalping and going for the shorts, but I'm actually a very conservative trader. And when I say conservative, it doesn't mean that I'm not going for the smaller trades. It just means that I've got a quality level that I do not deviate from. Very, 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 okay, never is a very strong word, Kilted. It's a very, very strong word. Let's just say I never, I try not to deviate from. There are times where I wouldn't say not reckless. Reckless is the wrong word. I'm never reckless. Loose with the rules. Only because I have a very, very strong idea of what the market's going to do, and it starts doing it as I'm seeing it. Now, if it does that, I do slightly change my perception of that trade. So I look at this trade and I say, all right, let me just take you through this. If I was setting this up for a Tuesday market watch, I set it up like it's not going to be a touch trade. So, and by that I mean, we put it on, we set and forget. That's how I do Tuesday market watch trades, mainly because I know it's going out to you guys, and you're not always going to be in front of the charts like I am. So it's no point me talking about a trade where you have to literally be sitting there and watching it for 5 hours to actually get it in and get it successfully. I'm trying to give you a trade that you guys can actually just place or just watch for a bit, set an alert, you can get in and get out, right? That's the easy trade, I call it. And if I was setting this up as an easy trade, there's no way in the world I would take it, right? Now, if I was sitting here and watching it and it kind of started to break up, I went to a 15-minute chart, it had all the lightning bolts in the right order, things were moving quite nicely, and it hit that level, I could be inclined, and I'm not saying you guys do this, I actually highly suggest that you don't, but I could be inclined, and this is what I say, sometimes I'm a little bit loose with the rules, I would be inclined to take it. And that's only because I would still have a stop loss I'd have it a bit closer, no question about that, I would, because I'm watching the trade. It's happening as I see it, and I'm going to watch it very, very carefully. If in any way, shape, or form it starts to do the wrong thing, and I'm not happy with it, because I'd already be in profit by then, I wouldn't take it unless I was already straight in profit, I would take it out. Okay, so even though I've got a stop loss and my risk is managed, even though I know my stop loss is too tight, I wouldn't actually ever really let that stop loss get hit, because I'm watching the trade, and I make it my mission for the night that I'm going to be doing some work, and I'm going to be watching that very closely. And if I see anything on the smaller time frames that concerns me that trade is going to reverse, I'll take it out. Even if it's at a small loss, I will still take it out. Okay, and that's only so I can get my risk ratio worth the effort. Now, again, that's only if I'm absolutely watching it. Okay, I would not do that if I was going to leave it alone. I would never allow a trade that has more risk than reward. Now, Stephen's fallen off his chair. He's sitting there saying, hang on a minute, the risk reward on the trade, you're saying in the options course, there are lots of strategies that you're showing us that have got a risk reward that is less than 1-to-1. And this is true. And if you think that's true now, Stephen, you just wait till the next one comes out, which is the short. Actually, it's not the next one. It's actually weeks away. But the short butterfly, you wait till you see the risk rewards on that one. They are so misskewed that you're going to be wondering what the hell is going on here. But there's a very, very good reason for that. And that reason, no, I'm not going to go into it too much. But the reason for it is because it's such a high probability trade that it's actually worth the smaller reward for the risk. The risk doesn't change. You're still only risking the percentage of your account, but the likelihood of it working out is why the reward is so little. It's a huge likelihood. Okay, it's almost like, let me tell you what it's like. A long butterfly, right? You have to basically predict where price is going to be at the expiry date, right? So let's just say, as an example, we think we're gonna put a long butterfly with the center of the butterfly at the 73.30 for next week, because that's where we think price is going to be. The closer it is, the more money we're going to make, right? Straightforward, right? How difficult is that going to do to get that level? It's gonna be almost impossible, right? If you're in a consolidation zone, not too bad, but if you're trying to pick a level into the future, very, very, very difficult to do. Okay, that's why you're getting pretty good reward for your risk, because it's difficult. You're getting paid for the risk that you're taking. So although your risk appears small compared to your reward, the likelihood of you getting that reward is quite remote. So even though the risk is misskewed, it might be a 3-to-1 trade, the likelihood of you getting that 3 versus the 1 is highly, highly unlikely. So that's why you get paid so handsomely. Now, a short butterfly is the complete opposite. What we're basically saying is that we don't want price to be right at that point at the expiry date next Thursday. Okay, far easier to predict where price is not going to be versus where price is going to be, especially when you use technicals, right? So that's why, although you're taking a risk reward that's far less than the 1-to-1 ratio that we recommend for normal trading, the likelihood of those trades working out is extraordinarily high. All right. Now, yeah, I don't even know why I'm talking about short butterflies, because it's not even out yet. It won't be out for another 2 weeks. But that's just to give you a bit of an idea, because at some point you're going to see it, all you option traders out there, and you're going to say, hang on a second. Ty's Q&A said he never takes a trade under 1-to-1. In normal trading, yes. But in options trading, it's a different story, especially when you're doing income plays. Okay. So does that make sense, Stephen?
Sure does.
So you're not going to be horrified when you see a 4-to-1 the wrong way risk ratio on a short butterfly?
I'll believe anything when I see it.
Yeah. Okay. It really is as simple as that. It's as simple as that. It's saying that, you know what, I don't think that price is going to be at 74 by next Thursday, right on 74. I don't mean going through it. I mean being at that level next Thursday. Now, the further out you go, the less the risk is going to be and the higher the reward is going to be. But like I say, the likelihood of it actually happening is going to be obviously increased the further you go out. So you're going to be paying, the risk versus the reward is just going to be completely miscued to the point where it's not even worth taking the trade. But there is a fine balance, and you'll see that in the course. It's pretty cool.
I've seen something like that, Ty, when I've flipped around the settings on, I think it was a Condor, and you end up with a zone where the loss is in the middle, and you're actually predicting where price in a range won't be in a range for that period of time.
Are you talking about the short Condor now? Yep.
I think it's the short Condor. Yeah, I haven't. All I did was I flipped some settings and then went, oh, look at that. I've now got to predict that the price is going to be on each side of the wings.
That's a short Condor you're talking about, absolutely. And you know what? A short Condor is exactly the same as the short butterfly, except there's a range, obviously. So the short butterfly has only one strike in the center, so price has to be effectively away from that center strike, where the Condor's got a range. And of course, the value. And look, what you're going to say when you come to the end of it, you're going to see, there's 6 sections in the range bound market, and you're going to say, well, wow, a lot of these basically are very, very similar. Which one's the best? Quite simply, the one that's going to give you the best return for your buck. Like, not all of them, all of them probably can be applied, but all you got to do is work out which one's actually going to give you the best return, and the one that's most likely to work out. And that's why we give you all the ones. There are a lot of different option strategies out there that we do not do in the course. We only put the ones in the course that we actually do ourselves. And that makes sense to me, for right or for wrong. I've already had, believe it or not, I had some guy email me saying that although the rising markets module appears to be finished, there are strategies that have been left out of there that would definitely work in a rising market. Well, sure, of course there is. I could probably show you 15 candlestick patterns that I've never talked about that will work in a rising market, but we don't talk about them. Why don't we talk about them? Because we don't trade them. And like I've always said all along, our whole course, our whole structure is built only on what we do, because we can't. I would think it would be fraudulent for me to be explaining something that we actually don't do ourselves. That goes against the very fabric of what we're trying to achieve, right? So yes, of course there are different strategies that we haven't mentioned, but we're only mentioning ones that we know are proven to work in the environments that we set them up in, with the TA, of course. So that's why you know there are going to be things that you may not have you might expect to be there that aren't. Mind you, most of them are, but there are people are always trying to catch you, like they're always trying to trip you up. It seems to me like quite stupid, actually. Like, I mean, why would you focus? You've been given so much good information. Why would you try and find something that's not in there and try and make out like it should be? When all we're trying to do is tell you what we do, and they're trying to tell me what I should be doing. Like, how about that, Stephen? Someone telling me what I should be doing in the options market, because like I wouldn't know. And yeah, that sounds. It's almost like, and I do try to explain it in the course. You don't have to do every single thing in that course to make money. You have to do what resonates with you. Sometimes people are going to find MACD trading is their specialty. Sometimes it's going to be channels. Sometimes it's going to be range. Sometimes it's going to be pullbacks to the 20 moving average. There is certainly no right or wrong. You don't have to be the master of every single strategy. All you need to do is have something that you completely understand and works for you. You don't have to master everything. In fact, I probably encourage people not to, especially if they're limited on time, when they haven't got as much time as a full-time trader has, that they can actually apply a million different strategies and understand all of them. We're fortunate, Thomas and I are fortunate enough to be able to do this all the time. So our understanding, or our level of understanding, I should say, across many, many different strategies is probably a little bit more advanced than your average trader who can only look at the charts for an hour or two a day, if that. And that's okay, but it doesn't mean, I just still find it amazing that someone can come out of the blue and say, oh, yeah, there's a different option strategy that we could have added in there that would have worked as well. Yeah, that just blows my mind. But anyway, that's all right. We're not gonna worry about that. I lag people in literally every Thursday Q&A. I think part of it is a rant on someone who's annoyed me for the week. And you know what annoys me about people like that is, I can assure you, right? I go and I say, okay, here's your average punter who thinks he knows a little bit more than he probably should. Let's just go have a look at how he's gone. And I can guarantee you, this fellow was exactly as I suspected. Failed 4 of the 5 assessments for the rising markets. How about that? Failed them. Didn't even pass on the option strategies that are tried and proven to work. And he's coming to me. Anyway. What do you think about that, Stephen? I mean, I think it's pretty good to go
through that without swearing.
I know. It's it's a fine balance. I'll tell you what, it's a fine balance. But look, back to this. In normal trading, risk reward is extraordinarily important. Less so when you're doing income strategies and options. That's probably my point. It's taken 10 minutes to actually get across, right? So that's why this is the exact reason why I wouldn't take this trade. Okay, very, very straightforward. Everybody see that? You got that one, Fred? See that? Yes.
Yeah, it's very clear. I wouldn't take it in the first place because of that resistance level there.
Yeah. I don't worry. There's a lot of reasons why I wouldn't take this trade. But what I'm trying to show, but that's really good, and that's you're highlighting my point exactly, Fred. And quite a few of you in the comments have highlighted the exact same thing. On face value, right? A year ago in this community, if I showed you a chart that had divergence like that and price action like that, I can guarantee you 90% of the people would have been jumping into that trade, sight unseen. Yep, Class A divergence, stochastic going in the right direction. Let's go. But now, look at you all. You're understanding, not just because I'm saying it, that there are serious obstacles here that have to be overcome in order for this to play out. And we're not just automatically making a decision based on one thing. We're actually making a decision based on many things, least of which, we've got it's actually not just, it's just not a great trade because the risk reward is wrong. But this is why I explained earlier in the section that everybody now, or not everybody, but a lot of people in the community are really thinking about the next step. They're not just jumping in. And that's amazing because when you're doing that, it means that you are a long way progressed to making something of this as a career, because it's the only way you can. I can tell you that. If you don't filter out bad trades, it's a very, very, very long road. Very long road. Isn't it, Kilted? I know, I think you're there somewhere.
Yeah, very hard. Yeah.
It is. You've got a part of trading and a very, very big part of trading is actually picking the trades not to take, as opposed to picking the ones that you're going to. And I know that sounds counterproductive, and I know it sounds probably a bit weird, but believe me when I say, the art of becoming a successful trader is actually knowing which ones not to take, not the ones to take. The ones to take are generally pretty obvious, but sometimes, yeah, you can be fooled. And that's not, if you're being fooled here, it's because you're being blinded by the bigger pattern, and you're not paying close attention to what potentially is a very, very strong role reversal zone. Yeah, I look at that and I see alarm bells, but some people will look at that and see a golden trade that is, can't possibly fail. So that's why it's really, really good that everybody's starting to see it. All right, let's move on. We were on the CAD, very quickly on the CAD. Wouldn't mind a little bit of a bounce off this level. That would be nice. Maybe the 20 is just about to catch up. May well catch up if it holds up above here. That's the 4-hour daily. Yeah, still looking very strong. It's done. Look, it's done its job. I'm waiting for another entry. I mean, far out. Like, look at this. I mean, I can't say any more about that. You guys all see that, right? I mean, everybody took this trade, yeah? I'm assuming we're all in. Everyone got in.
Yep, all in.
Yeah, you can't let those opportunities. I mean, if you missed it, you missed it. You can't help it if you didn't see it. But I'd be very, very disappointed if you actually saw this and chose not to take it. That would disappoint me, because this is what we look for. This is what we strive for. This very, very, very rarely fails. And you've just got to have a shot. Okay, so that's awesome that so many people did. Like I said, for me, it's hit that zone. It's in the danger zone now of potentially reversing. But I still don't think it's going to reverse very far. I think it's probably still got a couple of good long legs up. What I want to see now is maybe, a pullback to this level would be okay. I don't want to see it really back down here. Actually, that would be quite concerning for me. I wouldn't mind it hovering around this level here, waiting for the 20 to catch it up a bit, and then maybe touch the top, and then push up again and maybe start going. I still think it's going to, I reckon we're going to around that 127, 128 again. That's what I think its potential is. Dave, you still in this, or did you get out of it in the end? I know you were going for something over 126, weren't you? Did you end up getting out of it, or did you stay in it?
No, I'm still in it. I've got a third. I've got 1/3 still on. I was thinking about adding to it today. I reckon if it holds up above this level, I'll probably add a little bit more to it.
Yep. Look at you scaling in and out. Goodness gracious. You are, I mean, I tell you what, yeah, I am amazed. I will give you credit where credit is due, Dave. Every single event, you are there. You are there moderating Thomas's rooms in the morning. When he was doing it at night, you were there. Like, you were everywhere. I don't know how. I can't wait to actually meet you in Cairns, actually, and actually see if you actually really do sleep, because I've got this theory that you don't. So if you're the last person at the bar on the Saturday night, I'm going to know why, because I think your stamina is unbelievable. But you do all the right things. You're scaling in, you're scaling out. You're not just leaving it all to chance. And I like that. I think it's a sensible way. I don't scale anywhere near as much as, say, someone like Tom does. He's believe it or not, he's actually very risk averse. He's far more risk averse than I am. And it's not that I make it sound like I take massive risks. I don't. But he is like a scaredy cat. Don't worry about that. Like, he'll scale in and he'll scale out and he'll just adjust and he'll sit there doing this and sit there doing that. And that's all good because it suits his trading style, because he's a little bit of a scaredy cat. And that's why I call him, and I keep telling him that. I think I'm not sure who I explained it to or where I explained it, but I generally, because I'm going for these short little sharp moves, I don't even get a chance to scale in, to be truthful, on the scalps. The scalps don't give me a chance to scale in. I just go, in and out, and if it works out, great. If it doesn't, I start to look for scale in and scale outs on a swing. And what I call a swing, anything sort of over, probably 60 to 80 pips, then we're starting to get in a little bit harder. yeah, that's when that's when we start to scale in a little bit and maybe scale out. But sometimes, I don't know, I'm never risking more than I should, as a rule. So, you know, a lot of the time, I just haven't got not patience, it's just the time. It takes a little bit too much time. That's why I always go for the short scalps, especially in markets that are behaving like they are at the moment. The swing trades, I set and forget a little bit, and I intend on scaling in or I intend on scaling out. I probably should have an automated system that does it, and that would probably make it a little bit easier, and I'd probably be more inclined to do so. But yeah, for me, I can get a little bit lazy in that regard. I have enough faith. Well, I do. I mean, I have enough faith in my analysis, I suppose, that if it works out, it's a good trade, and if it doesn't, I still think it was a good trade that just didn't work out. And so it's a little bit more. It's just a little bit more black and white for me sometimes. I don't know. Does that make sense? Yeah. Sometimes I actually do like the black and white of it. Like you either you got it right or you didn't. You know, it's different if you're investing, right? If you're investing in loading positions for the longer term, very, very different story. And scaling is actually really important. And that's a very, very different story. But for me, the shorter stuff, I get a little bit lazy, and it's very, very black and white. If that makes sense. Does that make sense, Dave?
Yeah, it does.
It's a bit different. It's a bit different to Tom's approach, but he doesn't scalp as much as I do either. So.
No, and I mean, I don't normally scale. I normally just go bang in 100% with scalps and that. But Tom's been talking about scaling on the stream so much, I'm trying to practice it and get better at it. So I was sort of kind of hovering over that trade and added a third in, and then another third, and then another third, rewarding it as it went. So yeah.
Yep. I can see why he does it, and explains it to the room, because look, when people are first starting out, I think it's actually a really, really good thing, because the problem is most people start out really, really short-term scalping when they shouldn't. That's the hardest thing to do, actually. And that is, scaling teaches patience, I find. So it is actually a good method to actually learn from. But when you've done it for a while, like I have, to me, trying to scale in on a scalp is not really having faith in the analysis for me. Like if I'm a little bit unsure of a trade, okay, go back to the Aussie for a sec, because it's all about learning, right? I know we're not really covering a lot of pairs, but this is about learning more than anything else. If I see that, I'm not gonna, I see a slightly dodgy trade here, right? Make no mistake, I've highlighted several times, but me saying that, you know what, it's slightly dodgy, but I reckon I might have a small position here. If it breaks this level here, I might enter a little bit more. And if it breaks that level there, I might enter a little bit more, then I'll have a full position. For me, I'm conjuring up a trade using a simplified method of scaling to enter what I think is a bad trade in the first place. And that's where you have to be a little bit careful, that, you don't want to take it to the nth degree where you're scaling into a bad trade to just see how it goes, because what you're actually doing, Kilted, is actually you're taking a bad trade and you're finding a way to trade it, if that makes sense. Does that make sense to everyone? I hope so.
Yes, it does.
Yeah,
absolutely.
So scaling's good, but only if you're using it in the right context. If you're using scaling to, find a way to trade what is essentially not a great trade, then it's very, very bad. It's actually counterproductive, because if it does work out, you think you've scaled really effectively, which leads you into a false sense of security. And if it doesn't work out, you're going to be like, I shouldn't have taken that trade in the first place. Then you're going to be annoyed, and that's not a habit you want to get into. Okay, that's the habit actually you really, really want to avoid. And unfortunately, using scaling the wrong way kind of gives you that out, because you make two advances and you say to yourself, well, you know what, I shouldn't have taken that trade. And then you could do one or two things. You could either revenge trade, and get annoyed by it and revenge trade, or you just let it go and learn from that lesson, okay? Or you start losing confidence, saying, oh, maybe I'm not that good at picking these levels. I thought I had it, and then all of a sudden you didn't. But you know what? You should never have taken it. Yeah, if you're conjuring up a way to trade something to make it better, it's not a good trade, and you have to just let that go. Okay, that's probably the words of wisdom for tonight. If I can give you words of wisdom, that do not try to conjure up a good trade out of a bad trade by using a mechanism that will work like that. All right. What I used to do is try to tell people that while you're learning and you're not as confident in your trading ability, reduce your trade sizes down to say 0.25% of your account, so you really don't lose any sleep over it, and you'll be quite happy to lose, a cup of coffee. But I stopped doing that mainly because what people started to do, they took that as, instead of trying to build their confidence on a trade that they like, they started to risk smaller percents on trades they didn't like to see how it would go. Now, that was absolutely the opposite of what I was actually saying. When I said, try and risk less to get your confidence, that wasn't risk less on bad trades to see how they work. It was actually risk less on trades that you're comfortable with. So that's what happens. Look, and that's why I stopped saying that, because people were taking it in the wrong context. They thought I was just, giving them permission, if you like I'm some freaking trading guy that I can give you permission to do this and do that, to take bad trades as long as it's a less of a normal risk trade. My point is, don't ever take a bad trade. If you don't like it, don't take it. If you see problems, don't take it. Simple as that. Okay, it couldn't be more simple than that. But please do not take that in the way of, don't take that as we shouldn't scale in. Scaling is a good thing in the right context, but not as a mechanism to enter a bad trade to see how it goes, and then you don't feel as bad because if it didn't work out, you only lost 1/4 of your trade instead of the full trade. Don't ever say that to me. That's probably just a word of advice. Don't ever Discord me and say I traded a bad trade, but I only lost 1/4 of my risk because I only put a little bit on. I'm not gonna enjoy that, and you may not enjoy the response, because that stuff is bad. It's just bad because it teaches you bad habits. Okay, not so much when it doesn't work, but actually more when it does. Right, that's the problem. What it will do is occasionally you're gonna get them. If you place enough trades, you're gonna get some right, good or bad. Right? We don't always know exactly what the market's going to do, and this is a perfect example. You might say, well, you know what, Ty, I like that MACD divergence. I don't care what's in front of it. I'm going to trade it with 0.25%, and the damn thing works out, and it may well do. Right? Then you're going to say, oh, damn, I should have gone with my gut instinct and just put the normal risk on because it looked okay on a 4-hour. You're completely ignoring the fact that there were, that would not score well. Who brought up? Did I see Presic somewhere? Someone said Presic. That would not score well on a Presic system. It would not score well. Simple as that. There's no way it would score well. So, knowing that, why would you trade it? It's not bingo. We're only trying to pick good trades. So that's my point. You'll be led into a false sense of security. That happens to the best of them. Don't worry. You'll get a couple of them, and then you'll say, well, I'm just going to start trading full risk on these because I'm going to go with my gut instinct and screw what's happening around the market. And that's when, and you know what's going to happen the first time you put full risk on, right? It's not going to play out the way you want it to when you start to take bad trades. So you really want to take the bad trades out of your trading and don't find a reason to trade them because you really want to, you want to go into the weekend with a trade on or finish trade. Presic. All right, let's start scanning some markets. I've got 5 things I've got to check, and I've got 10 minutes to do it. Euro USD wanted attention. Okay, Euro USD. I had 5 requests for this. Is this a morning star? A morning star on the daily? Could be. Certainly setting up in a way that it's going to be correct. I would want to see a bigger daily close. No question about that. Not sure why. Why am I seeing my? That's a bit weird. Hang on. Just let me show my. Okay. Yeah. So it wants to close. It definitely wants to close up here to be an absolute fully fledged morning star. You would argue that that's a pretty strong pattern on a daily, and I would. Again, I'm very, very conscious that you're trying to catch a falling knife, but in saying that, I would respect that pattern. And the reason I would respect that pattern, if it did close close to being a full bullish, mirror of the bearish candle, is because that would proof to the 20 moving average. Okay, so the length of this trade overall would, when it actually closes out and trades that way, would proof to up here. Okay, so
is there anything off to the left, Ty? Is there any demand, any other candles if you zoom out a bit?
That's where it would go. What was that? Sorry, Kilden?
If you zoom out a bit or even go to the weekly, is there anything to the left? That would...
There is.
Yeah,
no
there you go. That's demand zone there.
Yeah, there is. It's a level that this is one of those things where, like down here, like this euro got to 112, 60. That was about 20 pips more than I expected. My target was 1280. So I'm very happy with that. Again, I'm not trying to get this down to 110, or not yet. Anyway, it's got a little bit more work to do that. It was always going to respect this zone, right? If you shorted the euro and you hadn't taken profit in this zone, I would be quite surprised. I'm not going to lie, because we talk about this day in, day out, that this is going to find trouble getting past this zone in the first go. Now, on a daily, we could see. Let me get rid of that.
That's reversed though, almost to the pip.
Yes, yeah, and quite often, when they have a big move like that was a good move. Like, make no mistake, like that was a beautiful. Look at that there, like far out kilted. Look at that.
It's coming down to retest that zone though.
Yeah, I know. Right, literally to the pip. If you were going to pick a target, it went more than 1280 was the absolute. I thought 1280 would be the absolute stop zone. And quite often when it's coming down to momentum, it is going to push past it. I mean, it's, and it's not to say that it won't break this eventually. I think it probably will, but I would be surprised if it did without a retest of something. And that pattern may well be the retest. So, if we see a bullish close around this level here, that's a fully fledged morning star, then I would be quite comfortable taking a counter to the 20 moving average. I think it's easily possible. But at that point, we're not trying to reverse the market. All we're trying to do, I'm not trading this to get back up to 119. I'm just trading this, if it happened, to get back up to, what would effectively be maybe a 114.20. You're talking about a 40 or 50 pip, maybe 60 pip scalp, right? So don't get excited. We're not calling 120 on it or anything silly like that, but it's a counter trend. One that would probably be not surprising to happen off that bounce. In fact, I'd like to see it. I'd like to actually see this, because then we can short the bastard again as soon as it gets to the 20. And there's nothing like taking it twice, like getting in, getting out, and getting in again. That is pretty cool. Can everyone see what I'm seeing there? Does that make sense to everyone? Why? Yeah, that could definitely, and is probably likely to get to the 20 moving average. Make sense?
Yep.
It'll be about 1-to-1, Mark. It should be about 1-to-1. Because it should be the pattern by the pattern. That's what we'd be looking for. So it should be a 1-to-1 on that one. Right, ASX 200. This one is, it showed a little bit more weakness than the S&P did, that's for sure. I'll quickly go to the S&P first. I mean, this is trying to break to a new high again. We got absolutely, like CBA got obliterated today. I'm not sure, for all of you Aussie traders out there, you probably know that CBA dropped, over the last couple of days, it's dropped the best part of $10, which is a big move on it. So that really, it did hurt the index. It dragged down a lot of the banks. I don't see a lot here. I mean, I see it's at support, because of all this here. For me, this has got to do something now. It's either, I'm not even like, well, I've got options on it, but I'm not. They're not anywhere here. The options trades I've got on this are up here and down here, which is exactly where you would want them when the market's doing exactly what it is now. And you see what I mean, actually, and that's probably my point too. You know, when you've got the tools in your tool bag on how to trade particular things, you can do. How would you trade this if you're actually trying to long it or short it? It would be quite difficult, right? You got pretty noisy candles. You got a shit area to deal with. Not nice. Not nice at all. But if you were quite happy that you had positions, as long as it wasn't getting down here and it wasn't getting, as long as it wasn't going up there, you'd be pretty happy with the world. And that's my point. When there's no trading to be had in here, you're trading the boundaries. Okay, that is really cool. That's what I love about having options like that as part of your arsenal. Now, and the ASX 200 is a really, really good optionable indice, by the way. So the S&P 500, again, it's one of those ones where it's trying to bust to a new high. I don't know. Yeah, I don't know. For me, it's looking, even though it's there, it's not there with a great deal of conviction. I think it's a little bit confused. It doesn't know whether it wants to come down or whether it wants to break to a new high until it does something good and proper, like a big candle. Like if you look at the ranges of the recent candles, they're very, very tight. You're talking about really, really, really small ranges, daily movement. So it's either consolidating and building up momentum to break to a new high. I don't like it when it's doing that right on the break point. As you know, I'd rather it was coming down here and doing that and then blasting off. Not sure what happened there. A little bit of background microphone noise. So yeah, for me, very, very difficult to trade until it actually either breaks up higher or preferably breaks down lower to at least this zone here. I'd be comfortable with that. But this one, I can't remember who asked the question. It was in Discord. Sorry. For me, difficult to trade. If you really, really want to trade it and you're not using options, I'd go to a smaller time frame. I'd understand that this level here is obviously a very strong roll reversal support zone. No secrets there. You can see the wicks are, big pull-ups on those 3 wicks there. Another big pull-up there, and you're getting rejection here. It's finding it very, very difficult to get lower than this, but it's not doing a great job of actually going higher either. So knowing that level is there around that 73, sort of 60 area, go to the smaller, as you can see here, wait for a change of trend on the way up, and just sort of trade it up to the top. That's how I would scalp it. But I would only be doing that if I had absolutely nothing better to trade, and I think there's far better opportunities. All right, so just be mindful of that. Okay, what do we got? Can you do IWM? IWM? Sure. Will it come up on my MT5 platform? Oh, look at this old school. Love it.
It's the Russell, Ty. Just do the Russell 2000.
Is it what code is it in here though?
It's the what is it? US 2000.
Oh, it'd be in the indices part. I hate this platform.
Yeah.
I'm starting to hate this platform now, actually. Now that I know what's available, because every time because what happens is, right, I click the top, and what it does, like if you click the top and you click these things, it changes all the orders. So 1 minute it's in alphabetical order, the next minute it's in like indice order. Like I keep stuffing it up and I can't remember what the last one was. So now I've got to find an indice. That's really frustrating. But anyway, and I don't do it on purpose. I just accidentally click it when I'm trying to be a bit fast. Let me just see if I can find it, because it's not one that's on my charts. There we go. I'll replace. There's natural gas. Natural gas is looking a bit sick too, isn't it? Is this what you want, Dave? Is this one you want? The US 2000?
Yeah, that's the same as the IWM. The IWM's just the ETF, I think.
Yep. Yep. What are you doing? Are you trading it? Are you trading this one? Do you think? Or you're looking for a trade?
No, I'm not trading it. It was someone else who wanted it.
Yep.
Gav G, yeah.
I actually. Oh yeah. Sorry, I'm getting confused. I got a couple of DGs in here. Yeah. Okay. Sorry about that, Dav. Yes, I actually don't mind this one. I don't mind it, and mainly because it seems to be pulling back. I mean, that's the ideal level. There's no question about that. It's right on it, right? So if you're gonna looking at it from a technical standpoint, you've got to say that that's a role reversal zone. There's no question about that. And it's being bolstered up by the role reversal and the 20 moving average. So I can see a very strong case as to why you would want to add to it if you were, I'm assuming you're already long and you want to add to it. So, okay, yep, cool. That if you're going to, this is probably the level that you would do it. I do not see any reason why, I don't see false here. I don't see false. If I was going to pick holes in it, I would go to some of the bigger time frames. Still can't find a hole in it. MACD is not exactly friendly, but look, how can it be? MACDs aren't going to be friendly when you've got a daily doing this, right? Because I mean, if this is doing this since December 2020, of course the moving averages on the weekly are going to look quite crap because there's no movement. It's been range bound, very, very range bound for that matter in a channel. So there's no surprise to see a really weakening MACD on a weekly, but you'd ignore that for that very reason. It's understanding why that MACD is weak. So, we've had a very, very long sustained range bound market. It's the breakout. It's cleaner in my mind than a lot of the other US indices. I'm not going to lie. And if I was going to go long, I'd probably go long. I'd go long this before I'd go long the NAS or the S&P 500 because I think this one's got potential. So, I would think that I like the role reversal. I like the 20 moving average pullback. I think that that double confirmation of support is a good thing. And this is serious support too. You're talking about very, very long sustained support. That resistance was there for a long time. So it's a serious level. Yep. And I'm assuming, are you aiming for the previous high, or are you thinking it's going to go higher than that? What are your thoughts? What are you going for? I'm just curious. I would be going for the previous high because I'm just, I just love scalping. I just love it. And going up higher is a risk to me. Yeah. Are you going to go higher? Yep. I'm assuming you're going to take some profit there though, right? If it hits that high again, you'd probably take some profit. I'm assuming. I like it. I think it's got merit. There's definitely enough support there, and I like that there's a good move up without a lot of trouble in front of it. I think that's probably the part that would make me the happiest. That that there from that level of 23 sort of 70, call it, up to 24 almost 60 is very loose. You got no serious traffic in front of it. So I think if it started to move and gravitate up, it could get there without a hell of a lot of trouble. And it's a retest of a very important break. So no, nothing wrong with that. Good trading. And if you're already in it, really good. If you got the break, nice one. Yep, that's a good one. The last one I'm going to have a quick look at because it was a request and I promised I was going to. Where is it? BHP. BHP. That's an interesting one. I very rarely get stock. No, it wasn't BHP. No, hang on a minute. Let me read the question properly. That was a question on BHP, but not for Q&A. Crude. Yeah. Yeah, very similar in a way to what we just saw, but not quite as compelling. That level, I mean, the 76 is pretty tasty. 70, 78, I don't know. I'm not convinced on this. I'm not convinced. This level for me to trade this long, just to explain why, you look at it and you say, well, isn't that similar to what you just saw? And you're quite happy to go along on that. This is a little bit different. I'll tell you why. This one's different because it's got a very serious weakening of MACD on the time frame that we're actually identifying the pattern for starters, but also it's actually made a lower low. In fact, it's almost made two of them. So for all intents and purposes, although it's not a very pretty lightning bolt, it's a lightning bolt nonetheless. So it's a change of trend. And, for me, the only way I would take this long, sorry, not short, I'd be happy to take this short if it breaks that level. But even if it breaks this level, I'd wait for a retest of it. I want confirmation on this because this troubles me. Even though it is a support zone and it is a role reversal zone, it troubles me that it's making lower lows. Okay, so this has to reverse on a 4 hour at the very, very least. At the very least. So 4 hour change of trend, higher high, higher low, then I would look at potentially longing it off this level. I think it's a long way from that, and it's probably one of those ones that you're not going to get an instant gratification trade very, very quickly. I don't think. I think it's got a little bit to play out. I would trade the short on this if it came down and then tested it from above. I think that would be a fantastic short, but I would play the long on it if it does that lightning bolt on the 4 hour, and that would be enough on this one. I think you got very clear targets to go for. It's not a bad trade, but to me, it's kind of in the middle of no man's land. Can everyone see my logic on that? Can you see why this is just not an automatic long if it touches that level? Can everyone see the reasons for that?
Yeah, definitely. Good explanation.
Awesome, great. Yeah, it's really important because that's the because that's what separates a good roll reversal zone from a roll reversal zone that's just kind of it might hold up or it might not. You don't want to see weakness in the price. It's all about price at the end of the day. Price is everything, right? And the only difference between this and the S&P, the Russell 2000, is that price action is very, very different to this price action, mainly because this is showing weakness in the bigger trend, even though it's approaching a level of support. That's why that concerns me. I would trade it both ways, but this one requires more confirmation. That's about the best way I can put it. If there's doubt, it's still good. I don't think it's a bad trade, but I think it needs more confirmation. It needs a little bit more proofing to actually take this trade. All right. So hopefully that answered your question, William. That was a William trade. Javid wants an explanation of a lightning bolt. Yep. Okay. Javid, I was literally about to wrap up, but you know what? Lightning bolt it is, because I've got I had my Epic pen, and I was going to show off to Kilted again because I'm pretty sure that it's going to work. Hang on. I could actually, you know what? I could not get this to work. I'm going to have to do a basic explanation, I think. Hang on. That's disappointing. Oh, yeah. Thomas told me there was a trick that I needed to do. I had to pick the screen or something. No, it's not going to work. All right. Lightning bolt. Is like this. So when price does this, this is a positive lightning bolt. Okay, you don't really need this leg, but I just had it there. I'll make a small one in a second. I'll make these as neat as possible. That's a negative lightning bolt, Javid, and that's a positive lightning bolt. So what you're looking for is price. See here. See how price has done that bit of a retrace and then made a new low. See, price has done that lower high, which is that point there, and push down to a lower low. Once it gets past that level, that is confirming a lightning bolt when we've got a lower level than the previous peak there. All right, so that makes sense, Javid?
Yeah, it makes sense.
Awesome. Yeah, that's all. They're as simple as that. Although it's a very simple concept, it's extraordinarily powerful. Very, very powerful. Okay. Price action lightning bolts are probably one of the most important trading concepts aside from probably your really good strong support and resistance. So definitely look out for them.
Just really a last question on that. Where do we have to take the trade on this lightning bolt? Like, so we have to do a pullback on the last leg, or what we have to do here?
Yeah. So if you were trading this, why am I echoing? I'm not sure why I was echoing there. Hopefully that's fixed up. The way you trade a lightning bolt is either you wait for the pullback. So what you can do is when it does this, back to that level there, that is the optimum entry. So see how that there, if you get a lightning bolt that does that and breaks a level of resistance above, comes back and retests it, that's the optimal entry for a lightning bolt, no question about that. And that would play out in this one is if it made a lower high low here and then came up and made a lower high and touched up there. So if price came down here like so, and then went up and tested it like that, that's your entry on that lightning bolt to the short. And same deal for the long. That's how you trade the classic lightning bolt setup. But if you had more time and you were scalping, what you would do is you'd go to the smaller time frames and you'd look for a little mini change of trend to try and continue that trend, or you would wait for a pullback to the 20 moving average to short it down. So you can join the existing trend, because the lightning bolt is signifying a trend is continuing or a trend is starting, and then you can basically enter on a pullback to the 20 moving average and then start going in the direction of the lightning bolt. Most important, in the direction of the lightning bolt. That's the most important part of that. All right, so hopefully that one makes sense. All right, team, I am going to have to let you go because I have got an hour's worth of charting I've got to do for Kara tomorrow morning before I go to bed. So thank you so much for joining us. We're going to stick to this time slot for at least a couple more weeks. I reckon we'll probably round up the year in it, to be honest, and then we'll work out how it's going to play out once we start again in January. Okay, so thanks so much for staying up and sticking with me, and thanks for all the questions. Have a good night, and I'll get out a Friday wrap nice and early tomorrow morning. See you, everyone.
Thanks,
Good one. Thanks, mate.